Assalamualaikum and hi everyone. Today our group will presenting a case study for the subject Professional Ethics DPA 50173. This presentation is prepared for Media Hairida binti Osman and our chosen company is Megan Media Holding Berhad. So this type of assessment is a case presentation. Before we begin, let us introduce our group members. My name is Noella binti Muhammad Nazaruddin. And with me are Muhammad Arif bin Nur Azmi, Putri Nur Aisyah bin Jamal Abdul Nasir, Tani Sharabi and Nur Atila binti Samsul. Together, we have analysed the case involving Megan Media Holdings Berhad.
My name is Putri Nur Aisyah binti Jamal Abdul Nasir. My matrix number is 06D8023F1083. Today, I'm going to talk about the background of Megan Media Holding Berhad. Megan Media Holding Berhad was a company from Malaysia based on Petaling Jaya, Selangor. The company was involved in the production and selling CDR, DVD-R, videotapes and other electronics products. Its main subsidiary was Memoritage Sdn Bhd. Megan Media was listed on Bursa Malaysia in the early 2000s and became quiet successfully for a few years with high sales. However, in 2007, the company started facing serious financial problems and was involved in accounting fraud. It was later found that the company had given false financial information. Because of this, Megan Media was delisted from the Bursa Malaysia in 2008. Today, this case is often used as an example of poor ethics and weak corporate governance in business.
The Megan Media case reveals several weaknesses in the company governance structure. First, the board leadership and independence were poor. The chairman had too much control over both management and board decision. This reduced a board independence and made it difficult for others to question or challenge board decisions. Second, there was a serious issue with the audit and risk oversight. Both internal and external auditors failed to detect fact transactions. The audit committee and financial reporting controls were weak, allowing fraud to go unnoticed. Third, there was a lack of conflict control. Payments were wrongly sent to related parties, showing that there were no strong controls over related transaction and cash flow monitoring. Finally, there were poor monitoring of subsidiaries. Major problems occurred in one of the subsidiaries because the parent board did not properly oversee governance, financial reporting and treasury operations. This weakness collectively contribute to the company collapse and loss of state.
Hi, my name is Muhammad Ali bin Razmi and my number battery is F1074. And now I'm going to talk about the corporate governance issues and corporate social responsibility in the Megan Media cases. First, the case of Megan Media show a serious lack of transparency and integrity. The company formed a chairman submitted false financial information to Bursa Malaysia. Over 75% of the reported revenue was actually fake. This means the management intentionally hide the true financial situation from investors and regulators. Such action clearly violates the principle of transparency and honesty, which are the foundation of good corporate governance. Next, this case reflects poor accountability among top management. The board of directors and senior executive failed to take responsibility for ensure the accurate reporting. When the false information was discovered, it led to a legal action. The chairman was jailed and fined. This shows that accountability is not just a policy. It means being responsible for your action and decision as a company leader. Moving on to CSR. The case also showed a breach of professional behavior, submitted a false information in unethical and goes against the standard. Unexpected from professional CSR is not just being about helping the community, it also means behaving ethically and following the law in business operation. By breaking this standard, the company damaged its reputation and lost public trust. And finally, there was a clear lack of integrity and objectivity in their action. Integrity means being honest, even when no one is watching, and objectivity means being fair and free from bias. The company failed in both. They mislead stakeholders to protect their own image. A socially responsible company should always communicate truthfully and make decisions that are fair to all parties involved. In conclusion, for the Megan Media cases, teach us that both corporate governance and CSR are closely linked. Without transparency, integrity, objectivity, and accountability, a company cannot gain trust, and without trust, it cannot survive in the long run. Good governance and ethical responsibility are not just law to follow. They are values that protect a company's reputation and success. And that's all from me. Thanks.
Good day, my name is Tanisha and my matrix number is F1086. So today I'm going to explain about role of auditor in Megan Media case. In the Megan Media case, the former executive chairman was jailed for falsifying 228 million of revenue out of 306 million reported. Under Malaysian Institute of Accountants MIA bylaws on professional conduct and ethics and ISA 240 and 250, the auditor must first verify financial statement. I think the auditor must check for contracts, transaction, receipt to ensure and to prove that the revenue had actually took place. So RM 228 million of revenue was falsified, which is a big amount. So this should have raised a red flag. Secondly, assess fraud risk. In this case, I think the auditor should test unusual transaction which carries a big amount, especially at the period end. Third, maintain professional skepticism. So the auditor should not solely rely on the management words, and the auditor should question suspicious figure and amounts. And lastly, respond to non-compliance. If the auditor suspect fraud, the auditor should bring that to the audit committee or regulators for a proper action. That's all from me. Thank you.
My name is Nur Atila. The first issue in the Megan Media case is the falsification of financial statements. The management intentionally manipulated accounting records to show higher profits and sales than what the company actually earned. They created fake transactions and inflated revenue figures to make the business look successful. This was done to mislead investors, shareholders, and the public so that people would continue to invest in the company. Basically, the company wanted to hide its performance and make it appear more profitable than it really was. The second issue is weak internal control and poor corporate governance. Megan Media lacked proper oversight and an effective internal audit system. This weakness allowed the management to commit fraud without being detected early. Another major issue is the failure of auditors to detect irregularities. The external auditors did not identify or report the manipulation in the company's account. This raised serious questions about the auditors' independence and whether they were performing their duties properly. The exposure of the fraud in Megan Media Holdings Berhad has severe consequences for the company and the broader corporate environment in Malaysia. The revelation led to a complete collapse of Megan Media's financial position, resulting in the suspension of its share trading in June 2007 and its eventual delisting from Bursa Malaysia in 2008. This incident highlighted serious weaknesses in corporate governance and auditing practices at that time. Consequently, it prompted stricter enforcement of corporate governance codes and auditing standards in Malaysia to enhance transparency, accountability, and investor protection. The case serves as a crucial reminder of the importance of ethical financial reporting and effective oversight to prevent similar corporate frauds in the future. As a result of this scandal, there were several major implications. First, the auditors were questioned by the public and regulators. People started to ask why didn't they notice the fraud earlier. Because of this, stricter rules and standards were later introduced to ensure auditors do their job more carefully in the future. Second, there was legal action and investigation. The Securities Commission Malaysia investigated both the company's directors and the auditors to find out who was responsible for the fraud. Some individuals faced legal consequences and their professional reputations were badly affected. Overall, this case served as a reminder of the importance of ethical corporate governance, strong internal control, and the vital role of auditors in the protecting public trust.
Next, I will explain some recommendations based on the Mega Media case. First, the company should improve its internal control and monitoring system. This is important to detect and prevent any financial irregularities yearly. Second, the board of directors must act independently and responsibly. They should make decisions based on the fact and not be influenced by management. Third, financial report must always be true and transparent so that investor and stakeholder can trust the information provided. Next, employers should receive ethics and integrity training. This will help build a strong ethical culture within the company. Auditor also need to stay independent from management to ensure that their audit work is fair and unbiased. Lastly, the government and regulators should take strict action against false reporting to maintain public trust and promote good corporate governance. This recommendation can help prevent similar cases from happening in the future and strengthen the integrity of companies. For the reflection part, we can learn several important lessons from the Mega Media case. First, poor ethics and weak internal control were the main reason for the company's failure. This shows how important it is for every organization to have strong ethical value and proper control system. Second, honesty and transparency are very important in accounting. Without them, stakeholders will lose trust and confidence in the company. Next, fraud might bring short-term success, but it will always cause serious long-term problems such as financial loss and damage to reputation. Good corporate governance is also essential because it helps boost trust and protects the company's reputation in the long run. Lastly, this case teaches us to always follow ethical and professional values in our work. As future accountants or business leaders, we should always act with integrity and responsibility. Here are the references that we use for our research and presentation. This source helps us understand the background, issue and listen from the Mega Media Holding case. And that's the end of our presentation. Thank you everyone for listening. We hope our presentation gave you a better understanding of the Mega Media Holding case and the importance of ethics and corporate governance.